Hey everyone, this is Nate McGee with MicroQuant, bringing you the value charts video of the day for Wednesday, August 28th, 2013. What I want to show you today is an interesting strategy on how to trade breakouts. Okay, we've been talking in my trading room about how to accurately trade breakouts or what the best way is. Personally, I don't really trade breakouts because I find that I get chopped out too much. But there is one strategy I will use whenever I do see it set up. What I have here pulled up for you is the Euro Loonie on a 240-minute chart. And this sort of setup, it happens a lot, and I will trade this, and I want to bring it to your attention. We're looking through some of our charts in the trading room in the past and finding some pretty sweet setups to illustrate the point. A lot of people find it interesting, so I'm going to make a video over here. I'll give you two examples, a long and a short, on how to trade a breakout. We've all seen this right here, where prices get into a range for a while, and you can see we have a few bounces in here on this resistance level. We have about 2 or 3 bounces right in here. And over here we have about 3 bounces, but many times people get faked out with these things. There's a false break. Oftentimes they don't know which way to go. For example, right here they would have taken a short, but then soon thereafter they probably would have gotten stopped out. So here's a strategy. It's called the last kiss. Basically, we don't trade the breakout right away. It really requires a lot of discipline to do this because the emotional part of it of potentially missing a trade kind of overrules the psychology and you want to get in on it. But it's all about patience here, and this really helps you to prevent some losses. Okay? So what you do is you wait for a breakout to somewhat confirm itself. So right here it broke out. It confirmed that it's out, closed above it, but we don't take that yet. We want to wait for price to come back and touch our level again where it broke out of, and we want that candle to close out in a bullish candle for a long and a bearish candle for a short, which we'll talk about in just a second. But right here you can see prices that came out, then it rolled back over again, touched where it broke through, and closed out in a bullish candle. So when it does that, I would put my buy in the next candle, and you can see right here it just went ahead and rocketed back up after that. That is a true breakout. If it doesn't do this, usually it is a false breakout. About 9 times out of 10 this works. It's pretty interesting how it does. It's part of the psychology of things. Whenever it does hit or break through a legitimate level, it's going to be used as support or resistance again, and when the market tests it again, if it fails, then you know it's confirmed breakout and you can get in on the trade. So as you can see, once it does break out, it heads on up. We can scroll over here and you can see price in it come back down there again until way over here, and even after that it still went all the way up, even to this day present, which I don't have on here. But we'll show you one more. Here's a bearish one. This is on the Loonie Yen on the 60-minute chart. This is almost a textbook one. What you see here is we have about 3 touches on our resistance, and we have quite a few right here on our support. Have 1, 2, 3, 4, about 5 major touches on our resistance. So what we do is right here, it did break out. Now people will get concerned, or they want to jump aboard the bandwagon here to get in on it, make all the profits, and sure, they would have made a few profits, but they might have gotten stopped out potentially. But as you can see, the last kiss plays out pretty well. It drops down, then it pulls back up, and once it touches our level again, okay, you want to see a candle close out that's bearish, in this case right here. So as soon as it's closed out in a bearish candle, doesn't matter if it's a reversal or anything like that, it's just a bearish candle. You would have taken your sell order right there once it closed, and you can see that played out pretty nicely there. So that is what we call the last kiss breakout strategy. It happens a lot. Keep your eyes out open for it. It's sure to prevent you from a lot of false breakouts and a lot of losses. Just requires a little bit of discipline and a little bit of patience, and that is what we do with these. So that's it for me, guys. Never miss another value charts trade. Go ahead and subscribe to this YouTube channel to see more video of the day and trade of the day videos. Again, this is Nate McGee reminding you to trade smarter, not harder, and as always, trade with confidence.